Interest rates are high. I get it. So a lot of people are thinking right now, I'm gonna wait for the interest rates to drop down, and when they do, that's when I'll make a move. So in this video, we're gonna break it all down for you and look at the numbers of what would it look like if you bought today versus waiting 2 years when the interest rates may or may not be lower. Currently, good credit scores can get you an interest rate somewhere in the low sixes. So let's say 6.25%, fixed 30 years on a $400,000 home purchase. Your mortgage payment would be about $2,465. That's just principal and interest. That's not including taxes and insurance. There's a lot of talk saying that in the next couple of years, we're gonna see interest rates probably go down to around 5%. At 5%, that same $400,000 house, the payment would run about $2,300. However, what you're not factoring in is the appreciation that you're gonna see over this next 2 years. So let me tell you where we are in a snapshot. Right now, inventory levels have increased. There is a lot of pent-up buyer demand right now. People just waiting on the sidelines for the interest rates to drop. So right now, if you try to buy a house, you're not gonna have to compete for the home that you want in most cases. And I think that you're gonna be getting a really good deal because right now, homes are not flying off the shelf. So the sellers are starting to lower their prices a little bit and they're willing to give the buyers concessions. Now, I think what's gonna happen is when the interest rates do drop, all of these folks that are sitting on the sidelines are gonna rush out there and start buying homes, a lot like they did during COVID. What that's gonna do is that's gonna decrease the amount of homes that are on the market currently, and people are gonna start fighting for these homes, which is gonna in turn drive prices up. If you bought now, you have the opportunity to lock in the house at the current market price. And when the interest rates drop, you can refinance the house, which is gonna bring your payment down. And you still have the price of the home locked in at what you bought it at based on today's rates. Whereas if you wait 2 years, you're gonna get the lower interest rate, but you're gonna pay more for the house. And then what happens? There's nowhere for you to really go. The interest rates probably aren't gonna come down from 5 to 3. So you're gonna be stuck with a lower interest rate, about where the market's gonna settle, in my opinion, is what I think, and you're gonna have a higher home price. So the question really is, do you buy now or do you wait? I think you should buy now. I think it's a much better opportunity for you right now. You can negotiate a better home price and the interest rates are going to go down. I don't know when, I don't have a crystal ball, but there's a lot of buzz in the market about what's gonna happen, and they think that it's gonna happen fairly soon. So if you wait the 2 years to buy your $400,000 house based on normal appreciation, price for that house in 2 years is gonna be $428,500. You're already paying an extra $28,500 for this house just by waiting. And that estimate right there is assuming that appreciation stays normal between the 1% and 3%, with no outside competition or no extenuating factors, which is going to drive the prices higher, such as lower interest rates, more buyers in the market pursuing the homes that are on the market. And something else you probably haven't considered is that by waiting 2 years, you've lost 2 years of equity position growth. So that's 2 years that you're not paying yourself back on that mortgage that you bought. And if you're renting, think about the money that you're throwing away. Rents are steadily going up. So with the average rent price being about $1,800 a month in our area, you're throwing away $43,000 in 24 months. That's a lot of money. That money you could be paying on your own mortgage. That $43,000 more than makes up the difference between the interest rates if you buy now versus waiting. That is assuming that you don't refi and take advantage of the lower rates that are coming. And another thing, if you can really, truly afford to live in your dream home right now, why would you wait? Instead of spending the next 24 months paying somebody else's mortgage, why not get into your new home today? And when the rates do finally fall, refinance at that point. And while we're talking about getting into your new home, keep AB Homes in mind. If you're looking for a rural setting, custom-built home to meet your needs, we would love the opportunity to talk to you. You can reach me on my cell phone at 757-435-9900. Find us on the web at abhomesva.com. We would love the opportunity of talking to you about building your dreams in your new home.